What's up, everyone? It's Scotty with MoneyVest. So let's talk about Tesla stock, and Tesla here dropping a little bit over 4.5, close to 5% on the day. Also breaking down under $200 per day, and that's quite an interesting level because it's not only a very important support, but it's also a psychological threshold because Tesla in the past has also validated 200 as a resistance and a support. So we're going to talk a little bit about the technicals, talk about what's the catalyst behind this move lower, and give you some context into the catalyst itself and why I don't personally believe that it's going to be a bigger issue. And we're also going to go over some analysis from Gary Black, which basically goes over what 2024 numbers are going to look like in terms of delivery volumes and what needs to happen over the next 12 to 16 months in order for Tesla to actually find some momentum once again in terms of the price action, of course. As always, if you enjoyed this video and find it helpful, make sure that you drop a like and don't forget to subscribe to the channel if you're just joining us for the first time. The 16% annual discount for our Discord and Patreons available with the link down below. Would love to have you on board. This does expire after tomorrow midnight, and the Halloween sale right now is going on, and that's going to be 50 to 60% off, coupon code Halloween, and you get access to fundamental analysis courses, technical analysis, options trading. There's bundles available, so you get lifetime access, and all the additional material is going to be added for free for you, and you can download Excel spreadsheets and a lot of other PDF documents and information material as well. So links can be down below, and this also does expire after October 31st. Now, going over to the catalyst. So today, again, we learned about Panasonic EV batteries, and they basically mentioned that their production, battery operations have fell to their first loss in 3 quarters on lackluster demand for Tesla Model S and Model X cars, and demand shifted to Tesla models priced below $80,000 threshold eligible for tax incentives, hurting the Japanese suppliers' profitability in the September quarter. So this was actually one of the main reasons why Tesla actually dropped the way it did. So if you come over to Tesla's price, down almost 4.79%. Breaking down a little bit under $200 per share. So sluggish EV and auto sales could continue next year based on what these chip makers just said. So again, some Panasonic battery operations, and of course not to mention some semiconductors, also suggesting that electric vehicle demand is slowing down. Now look, there is some truth to that because given how high the rates are in terms of auto loans, and we haven't seen those in several years, there is some truth to the idea and to the fact that demand is coming down because of higher borrowing costs and higher interest rates, because it's going to be more and more challenging for consumers to finance an electric vehicle when it's priced somewhere between $40,000-$50,000 to as much as $70,000 to $80,000. However, the context that I think we need to add here is that this is more specifically geared towards the Model S and Model X, which are higher priced vehicles for Tesla at over $80,000, and they're not eligible for the tax incentives, right? So as demand shifted for Tesla models towards Model 3 and Model Y, which not only are eligible for tax incentives, but also priced lower, and that's really where the demand is going to. So they basically did not see a pullback in overall demand. Now, there's a couple things at play here. So even though we have seen a shift in overall demand, that's lowered the average selling price for Tesla, right? So now, we've been selling off from $54,000 per vehicle for average selling price, now down to $48,000. So that's a $6,000 compression, which obviously has led to lower margins for the company from a gross margin and automotive margins, which obviously is hurting earnings. And as earnings do get hurt, well, Wall Street, they all care about the bottom line, the EPS, the earnings per share, which is what's driving the price even lower since their third quarter earnings. Now, Panasonic also cut domestic output more specifically for automotive batteries by 60%. Now, domestic meaning Japan only, right? So this is actually good context provided by, I forgot what the username was, but from someone on Twitter. But they also mentioned that, this was domestic output only, right? So we're talking within Japan, the domestic output being cut for these higher priced models X and Model S. So for those reasons, I think, yes, the market is kind of overreacting a little bit on this idea that battery production is down, so Tesla is dialing back on their expansion expectations, or maybe the deliveries are really starting to taper off. But we just learned, from delivery numbers in third quarter, they were still up over 25% on a year-over-year basis. Revenue was also higher. Of course, margins are still an issue. And I think a bigger problem is margins. I think that's going to be a lot more concerning for Tesla as we progress here over the next 6, 12, 18 months, because if interest rates stay as high as they are, it's going to become even more challenging for Tesla to sell electric vehicles. And unfortunately, they may have to cut prices even further to boost that demand for electric vehicles. Now, this right here is what Gary Black also mentioned that I wanted to specifically point out, because I think that's very, very true. Something that I've also talked about is that Tesla is not dependent on FSD or autonomous driving or robo-taxis or bots or any of that fluff yet, because majority of Tesla's valuation, majority of Tesla's business model is built on the foundation of electric vehicles. If electric vehicles continues to sell strongly and the demand and the margins continue to stay up, that's what matters more than having a pipe dream of FSD and robo-taxis. Look, all that is going to maybe happen in the future, and I'm not saying it's never going to happen, but it's way into the future, nothing that we can quantitatively price in right now. So Gary Black says, Tesla investors continue to argue my $300 price target is too low because I don't include for robotaxis, FSD licensing, or bots, but none of those are yet relevant to Tesla's stock price. Exactly what I've also mentioned, that I view Tesla as an EV company right now. Does it have the potential to become a tech company? Yes, that's where the most optimistic, most bull case scenario comes in, but it's not there yet. And here's what will drive Tesla stock the next 18 to 12 months or 24 months. Have auto gross margins ex regulatory credits bottomed? So that's a big question, right? Have gross margins indeed bottomed, or are we going to see lower margins? Wall Street believe they have. And is EV adoption slowing? Economy early adopters bought at high interest rates. Most suppliers say yes. So EV adoption is indeed slowing down because of the macroeconomics related to higher interest rates. And Tesla volume growth, Wall Street estimates fiscal 24 growth will be slowing down to 22%, with just over 2.2 million vehicles will be delivered. And as you can see, the Model 3 and Model Y are going to basically make up majority of that delivery numbers of over 2 million, with Model S and Model X coming in at just under 70,000 vehicles. So again, the Panasonic news obviously does relate well to Model S and Model X, but not the 3 and the Y, which are again lower price models, which are going to be selling a lot more, as expected, 17% increase on a year-over-year basis. But of course, the growth is still going to be there. And then, of course, future forecasts are for 2.7, 3.2, 4 million, and then eventually 4.7, 4.8 million by the year 2028 for Tesla. So yes, there's concerns. Yes, there's concerns related to the electric vehicle adoption slowing down. There's concerns with higher interest rates, and there's concerns with gross margins coming down. And Tesla's kind of battling through all these challenges right now, given the macro environment. And for those reasons, I think it's normal for investors to get spooked and for us to see, somewhat weaker technicals, and the fact that Tesla can indeed sell off even further. So if you come over to the analysis here, you'll notice that we are starting to break down below this $200 threshold. And as unfortunate as it is, and as I said, previously Tesla's validated that support very nicely. So you can see a very nice, consolidation here at $200, but then eventually that turned into a resistance, which took us a long time to break out. So once we broke down below the support over here, it wasn't, so we broke down in May of 22, and it wasn't until June of 23. It took us one full solid year to break back above $200, right? We basically stayed below $200 for a good almost 1 year before finally breaking out above that resistance. So, we are on our way potentially lower. This is the lower high and lower low pattern. There's a massive supply sitting right over there for Tesla. And that's exactly why, I had those covered calls from back in June, July that were up like 90-95% in profit, because of course we were expecting massive amount of supply sitting right over here for Tesla. So there's a lot of resistance, a lot of supply sitting between $280 and $320 per share for the company, of course. Support level next is going to be 151, and we know, as unfortunate as it is from a technical standpoint, that is going to be that next level in line with this previous resistance for Tesla as well. So that is going to be that next level and target to watch for Tesla. So hope you guys enjoyed this video and a complete update. Let me know your thoughts down in the comment section below. Again, we are coming down to pretty oversold levels on the RSI and the MACD as well. So 25 RSI right now. So can it go lower? Yes, absolutely. Nobody really knows exactly where the price is going to end up. But the bottom line is that yes, Tesla is dealing with a lot of macroeconomic challenges with our hurting which are hurting expectations for earnings, margins, deliveries, a lot of those things. And as a result, we are seeing a bit of a breakdown here for Tesla, sub $200 per share, with the next technical support sitting roughly at 151. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, and don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. 16% annual discount available till tomorrow, and Halloween is going to be that coupon code for educational courses, 50 to 60% off on that as well. Link's going to be down below. As always, happy investing. I'll see you all in the next video.